You're tuned in to Agriculture Today, and we start our Friday show with a grain market outlook. And as always, we're joined by K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Yes, thank you, Shelby.
Dan, starting our conversation as we normally do with what are futures looking like?
Well, we're sort of like the duck swimming in the water with a lot of things happening under the surface, but on the top it looks like it's pretty smooth. So that's not far off of all the fundamental things and questions that are roiling around right now. Yet the futures are I'd contend the futures markets are showing decidedly less volatility than the amount of news and back and forth and uncertainty that's out there represented in the market. And for instance, when you look at the futures, May closed at 441. May corn did up about 3 cents, and we haven't had a lot of major changes of late in the corn market. You look at Dees corn closed at 476 and a quarter. So and again, about 35 cents of I guess I'd call it uncertainty. Some in past years have called those risk premiums. Economists debate over that, but whatever that is, the amount of questions that we have in the market, some of them about still differences in what the USDA says and what in-country sources say in Brazil, and problems creeping up in Argentina late season, all that's there. The market is not taking that into much response until they get some confirmation, and that confirmation is likely to come, at least the chance for it, in either the May 10th or the June 12th USDA WASDE reports. But that's really where the market's focusing at. And I would say when you look at the May corn chart, again, not a lot of change. You do have we had been trading as low as 425, as high as 445, now down to 441. That's within the last couple of weeks, so not a lot of change there. And I would say also when you look at the soybean market, May closed yesterday at 1162. November new crop 1175. So again, about a 13-cent difference, but that's really not much. And the price patterns for the May contract, and again, we're almost to the place. Gosh, we're within a week of the end. Well, next week will be the end of the month. We'll be entering into the delivery period for the May contract. So we'll start talking about the July contract and have some of the volatility that can come into the market from entering a contract delivery periods that might come into play. But anyway, again, had closed as low, traded as low since February is about $11.30, 11.29, as high as about 12.28, something like that, and are at 11.62 and 3/4 as of yesterday. So it just sort of is what it is. If there's a market that's showing more movement that we're paying attention to, it would be on hard red winter wheat. The May contract closed yesterday at 632. That's been up. We've had 5-6 or so days of markets moving higher for that purpose, for various purposes, I guess. And the July contract 640. Interesting carries now that you're seeing from May 632, July 640 and a half, September 652 and a half, D 670 and a half. It's a market that's displaying a little more movement. And on the chart side for May, again, and we're getting close to contract delivery, you're looking at May from closing at 632 yesterday. It wasn't but about 5 days ago that the market closed in essence at about 580. So we've gained 50 cents in that market. Questions why? We're wondering about the crop conditions report. There's a report that the USDA NASS crop prospects report came in and showed about moderately worse conditions than we'd seen before. There's still the looming fear of what dry conditions could do in the Western Corn Belt here in coming months. But overall, you've got a market that's moving to the high side. And what I'd like to do is to as we go on today, talk a little bit more about the feed grains, probably corn, sorghum, maybe a little bit of soybeans, but then next week to really, as we're getting all that much closer entering into May, to talk about the wheat market in depth and see where things might go. So I'd hold off a little bit on wheat, but focus on these other crops if we can.
And taking a closer look at corn and sorghum. And first off, the USDA projections you're expecting are a little low compared to what you're actually seeing.
Well, I always have to be careful when I start talking like that because the USDA does, they take judicious steps. They're not panicky. The USDA projections for acreage, especially for yields and usage, as a rule, start out with the idea of being I guess steady, objective projections of where supply demand forces might go. However, it came out of the Ag Outlook conference in Ag Outlook Forum in February in the DC area, Washington DC. USDA had projected about a $4.40 per bushel price for the coming marketing year, the one starting with the next harvest out there from September 1st on, but then got a lower corn acreage number than had been projected, and ending up now at about 90.04 million acres planted. That's about 2+ million acres less than they had looked at. Their projection, of course, was 181 bushels an acre, with the highest we've ever seen so far as a U.S. yield, 177.3. So you kind of have the battle of expectations. Do you go with the trend line, theoretical yield of where you might end up at, or the highest we've been? So at least in my thinking, let's say there's about a third chance, 33% chance that we actually get about 4 bushels an acre higher than we've ever had at that 181. And if we just scale back to something at which it would be a good yield, like last year, 177.3, it makes all the difference with these new acres numbers, from about a 14.9 billion bushel corn crop with the lower planted acres, down to about a 14.5, 14.6 ending stocks. You're still ending with the 177.3 billion bushel figure. You're still right at 2 billion bushels, but it makes a difference given where we're at in these price relationships, 50, 60, 70 cents. So the USDA projected about 440 back in February. The markets, futures markets, are projecting right now about a 501 figure. By my estimates, it's more like 515. So again, the market right now is looking at USDA numbers, 440. It looks to me, with lower acres and more historically tracked yields, that we're probably closer to $5. So that May 10th WASDE report will be the first time the USDA puts out its projections for supply demand balance sheets in the WASDE reports, and my anticipation is that they'll still be at 181 bushels. They'll still be pretty pessimistic on things until they get more evidence. All that said, I just would not. To me, the question is, do we look at a 440 low at harvest, or is it more something over $5? And there's pretty ample evidence to think that $5 is just as possible as the 440, and that's basically what the futures are saying.
And for next week, we'll take a deeper dive into soybeans, but do you have a preliminary analysis for us right now, Dan?
Yes, for soybeans, whereas the soybean numbers that the USDA had projected in its Outlook Forum were basically at, I think it was about 87.5 million acres that came out in that Outlook in the prospective plannings report, at about 2 million acres less than that. Well, exactly 2 million. And I don't have any qualms with their 52 bushel per acre yield, although that'd be just about tied with the record high. But 52 to 50 bushels per acre makes a difference. When you come in and look at the bottom line of it, it's the difference between about a 4.4 billion bushel crop versus about a 4.2 ending stocks. if usage doesn't change, ending stocks with the USDA's projection, higher yields, about 357 million bushels, not a big deal. Ending stocks, about 8%, about steady as she goes. If it's 50 with any problem at all, and we've seen 50 quite often, that's been about the average of late, then you're down below 200 million bushels, down to just over 4% stocks to use instead of about 1120 like the USDA had projected in February. It's more like 14. So I understand the reticence of futures right now to price in risk, but I just do think that there's a fair probability that the USDA's, again, assumption of normal yields, big crops, at least has a question mark beside it for now. In fact, I put about a 40% chance on the USDA's projection for soybeans with their yields versus about a 60 with something lower, and that would put us at a higher soybean price than the November futures are showing right now.
Dan, as we round out today's conversation, and this is our last one in April before we hit May, anything producers should really keep an eye on entering into May?
Well, they'll be planting crops. Almost anybody that has spring crops, they'll be doing that. I think that and a fair number of them probably still have unsold cash grain. So I think I'd have about 95% of my attention on what you have to do to make money is get the crop in, and also be watching wheat too, to be careful of diseases, whatever else might come in. But then at least have some price goals out there. A bell ringing on your cell phone is about what it comes down to now these days, to so that you don't get so busy that if we would start to rally for whatever set of reasons, that you wouldn't miss out on the ability to say, hey, I want to deliver some grain, or tell someone with trucks from an elevator to come and get it, something like that, just so that the time of busyness doesn't keep them away from the seasonal volatility that could give us some marketing opportunities.
Dan, I appreciate you taking the time to join us today.
Thank you, Shelby. Take care.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be right back.